My grandma can trade that. This is price action trading. If the candles start to close above midsection, you're probably in trouble. You want to see candle rejections just like this, wicks of these candles holding below the gap. Then that's when you get confirmation that this trade's likely going to hold. Set your risk, set your target, and let the trade go. That's why I'm running the stop right here, because you're wrong if that gets pierced. But you see how these candles are closing? See how they're below the midsection of this gap? That's a great sign that it's respecting that, and the trend is not over to the downside. Trader to make that decision. Do I take the breaker or do I take the FVG? Okay, but watch what happens on this day. This is an interesting day. There it is. Boom. And then it exploded even higher from here. I believe we TP'd at about 100 and yeah, right around here. Very clean breaker model. Didn't even need the FVG to be tagged. And then watch what happens later in the session, guys. I love when people say this stuff is random. Watch this. What is this filling? That old FVG from 10:30 gets filled at 11:20, almost an hour later. And then watch what happens from here. This is a rare breaker because there's a fair value gap resting inside. How do we trade it, guys? Two ways, right? Who's been paying attention? Option 1, retest breaker. Option 2, fair value gap touch. Option number 1 is going to be the retest of the breaker. We're in the market here. Stop's going to be below the breaker. We're always going to be targeting at minimum a 1 to 2. The cons of this option is this market pulls back deeper into this and you're going to be running a little bit wider of a stop. The pros are going to be that if this market never comes deeper and retest the breaker, you will never get filled down here. So it's up to the trader to make that decision. Do I take the breaker or do I take the FVG? Wait for a retest into the inverted fair value gap. This is a good question. And this comes down to two key principles. What is price action telling me? And is my model a retest? I trade both of them, but I read price action first. Because if you can see the way that this is reacting out of the 15-minute unicorn and the way that we are displacing aggressively through this 30-second gap, you can see in the candle closures, this is very, very bearish looking. I'm not looking for a retest here. And you're going to see later in one of the trade reviews on YouTube that we're going to do here, you're going to see we took that as a retest trade, whereas this one we took with no retest. Because the way price was V-shaping out of this with strength, I knew that this was not going to be a retest model. We have to get in on this now. This is quick price action and it's very aggressive to the downside. Okay. So guys, trading is feel, man. It's feel. You can't just be a robot saying, I'm only doing this, I'm never doing that, I'm only doing that. Yes, you want to be robotic in your approach, but sometimes you got to have feel. The greatest traders in the world, they can see the price. They can see the distribution. They can see the orders coming through on the DOM. You got to have that. That is a skill in itself as well. If you're stuck to a daily bias, I think it's going to hurt you in the long run. I'm not a big person that trades daily bias. I know there's a lot of, I don't know what you even call it, CRT theory stuff and all that stuff out there. I am specifically looking for where the overnight highs and lows are resting, and I'm trading into those areas. Because when you think about it, I'm not holding trades the entire day. My average trade time is like 7 minutes long. So why do I care what the market's going to do all day long in the PM session or something? I just want to know what it's going to do in my session. So daily bias to me, it doesn't mean that much. Like, we're day trading. I want to find where the liquidity pool is, and I want to find how I'm going to take my trade into a liquidity pool. It really sucks reading the market perfectly, but not getting a fill and then having to watch the market run without you. It teaches discipline, and honestly, it's a part of trading, and you can't get emotionally attached to the chart when this happens. But I'm going to break down today's trade setup that I didn't get a fill on. I think 90% of the server actually took the trade. But I have to stick to my rules because that's all I have as a day trader. So here's today's trade breakdown. The first thing that stood out to me, I've been calling it out all morning. I want to see this market come down into this 1 hour FVG down here. This 1 hour unmitigated fair value gap that we broke out of in the morning session. I want to see this market get filled into V-shaped recovery and eventually target all the way up into this 1 hour unmitigated fair value gap. So that was my idea going into the session. And it took a while to play out, man. We had to sit around here for literally almost 2 hours waiting for this market to pull back into the gap. So once it does pull back into the gap, though, we get a nice V-shaped recovery out of here. The first clue today was the 30-second fair value gap that forms right here. We flip it with speed. And then confirming bullish order flow is the next mitigated, the next 1 minute inversion right here. Now, this is where I was looking to get filled, but what happened was I was waiting for price to pull right back down into this 1 minute FEG, this bullish fair value gap lined up with that inversion gap. So I wanted to get right into here, okay, to really reduce my risk and have a really good reward. Now, unfortunately, I don't get the pullback, and I just didn't take the trade today because of that exact reasoning. Sometimes I'm waiting for a retest. Other times I just trade it on the break. But today, with the way that we were delivering out of this gap, the price action seemed a little slower than usual. And this candle right here looked like we were going to get the pullback, and then it just completely rips higher towards the full TP. Regardless, great clean trade setup. Didn't take it personally, missed it because of that fact. But we end up getting TP1, TP2, and TP3 at 3 standard deviations for another 54-point day. See here, we have a bearish SMT that forms at the London high, okay? So London high is here, SMT is here. NASDAQ fails to take the London high. If we go over to ES real quick, you'll see that it does take Asia and London high. If we bring out our graph here, there's Asia and London highs resting. Go. We manipulate to the downside. First presented fair value gap on the manipulation leg. As you guys can see here, here's our manipulation. That's going to be our money sweep. Let me just mark it out for you guys so we understand what we're doing here. Go in. That's our money sweep now. There's a manipulation. There's stops getting ran. People that went long here just got ran right to the downside. Their stops got tagged. Now I'm looking for a 1 minute inverse to the upside. Okay. Now I'm just going to break down exactly what I saw. At this point, everything's framed. I'm just waiting. We don't need to do anything else. We framed the trade. Okay. We are framed and ready to go. Boom. Let me just go one more candle. I believe we flip right here. Okay. Boom. On this candle, we're in this trade already. Okay. So now we flipped. We have a 1 minute inverse to the upside, and I have plenty of liquidity to draw into, guys. Plenty of liquidity, man. 6 take profits that we were looking at today. All right. So at this point, guys, the trade is framed. We're in the trade. Stops are below the inversion. TP 1, 2, 3, 4, 5, 6. Okay. How fast this trade moves in our direction. Once we get, momentum, we're out. Full TP, 6 TPs slapped. And this trade only took us about 34 minutes, which is crazy. Ends up delivering 6 TPs for 51 points on the S&P 500. To you, you're trading this right here. Let's just understand something really quickly here. The problem is with most retail traders, you guys have zero patience. You have zero patience, zero discipline. And as soon as the market opens, you want to take a trade. Here's what I already know a lot of retail traders are going to do. They're going to classify this as the miniature sweep, right? And then they're going to say that this right here is a breaker block formation. Okay. And honestly, if they are trading this little breaker block, they actually made money. Now, the issue is, and a real trader will tell you, that there's actually nothing going on here. There's no liquidity being swept. This is seek and destroy price action at the bell. So you get seek and destroy up, down, up, chop, right? There's really nothing going on. What we are sitting here waiting for is a sweep of liquidity. Like, give us a direction first, right? The market's giving us zero direction here. This is just what we call seek and destroy, and people are getting tagged and bagged right here pretty bad, right? I'm interested in London low and or Asia low getting tagged, right? I need liquidity. I know, in my experience and many years of doing this, these are not liquidity sweeps. Nothing here is a liquidity sweep. Asia high is open. London low, Asia low are still open. My grandma can trade that. This is price action trading. If the candles start to close above midsection, you're probably in trouble. You want to see candle rejections just like this, wicks of these candles holding below the gap. Then that's when you get confirmation that this trade's likely going to hold. Set your risk, set your target, and let the trade go. That's why I'm running the stop right here, because you're wrong if that gets pierced. But you see how these candles are closing? See how they're below the midsection of this gap? That's a great sign that it's respecting that, and the trend is not over to the downside.